Folks, you know how every so often something big comes along and the whole market starts buzzing like a hive of bees? Well, this SpaceX situation feels like one of those moments. But if you're sitting there thinking the easy money is just in grabbing shares of the big rocket company itself when it goes public, well, I reckon you might want to pause and look a little wider. History has a funny way of showing that the real gains for ordinary investors often show up in the smaller outfits that get swept along in the current. SpaceX, planning to come public around June 12th, is shaping up to be the biggest IPO anybody's ever seen, with talk of pricing near $135 a share and raising something like $75 billion in one go. That's enormous. But the part that doesn't get shouted from the rooftops quite as loud is that the average person buying in after the first pop might find the real juice already squeezed out of the main event. The money, the serious money, tends to flow into the ecosystem around it, the suppliers, the service providers, the little companies that actually ride along on those launches and benefit when the whole sector gets re-rated higher. Let me step back for a minute and remind you what SpaceX actually does, because understanding the business makes the rest clearer. There are really three big pieces. First, the rockets. They figured out how to land and reuse the Falcon 9, which changed the economics of getting stuff to orbit. These days, they launch more mass into space than every other country and company combined. That's the highway they're building. Then there's Starlink, and this is where a lot of the real profit engine sits. Thousands of small satellites up there beaming internet down to places cables and towers can't reach. It's already serving millions of customers and throwing off serious operating profit with healthy margins. That's the part that's actually making money today while everything else scales. And then you have the newer additions, the AI side through XAI and the social platform that came along with it. The AI piece is still losing money as it builds out, but there are revenue streams like big compute deals that help offset some of that. When you buy into SpaceX, you're getting all of it bundled together. The rockets, the satellite internet, the AI ambitions, and the social media reach. It's a lot under one roof, and the valuation has as much to do with faith in the mission and the ability to keep raising capital as it does with today's number. Now, what's likely to happen when this thing actually starts trading? If you look at how most hot IPOs have behaved over the years, there's a pattern. The lead up sees media going wild, everybody scrambling for exposure, excitement building on excitement. Then comes the debut itself, lots of noise, an initial pop, maybe a quick top. After that, you often get a cooling off period where early buyers and some insiders lighten up and the price settles lower. Long term, if the company delivers, it finds its footing somewhere between the peak euphoria and what the skeptics thought it was worth. This one is going to be hotter than almost anything we've seen, so the swings could be bigger in both directions. But there are some wrinkles here that make it a little different from the usual playbook. They're only selling a small slice of the company, around 4%, at a massive valuation. That tiny float meeting huge demand means every buy order can move the needle more than it would with a bigger supply of shares. Plus, they're setting aside a meaningful chunk for regular retail investors at the same price institutions get, which doesn't usually happen on deals this size. And index funds are going to have to buy it mechanically once it qualifies for things like the NASDAQ 100, possibly in just a couple of weeks instead of the normal waiting period. Remember what happened with Tesla back when it joined the S&P 500. Forced buying alone can push prices hard in the short run. There's also the Elon factor. You're not just buying a company here, you're buying into one person's vision and track record of getting things done even when the odds look long. He controls the voting power even if he doesn't own a majority of the economic interest. That can be a double-edged sword, but in this case it probably keeps the mission focused the way investors expect. And the lockup rules are unusual too. Instead of one big release after 6 months where everybody can sell at once and often crashes the stock, They're spreading it out in stages with some bonus unlocks if the price has already moved up a certain amount. Elon himself and some big early backers are locked longer. It means less of a sudden flood of supply at one moment, but it also means a more drawn-out period of potential selling pressure. No classic wait 6 months and buy the dip setup like usual IPOs. The roadshow is getting underway right around now, so the next week or so leading into June 12th could see some of the strongest positioning action. If you don't want to pick individual names and still want a piece of actual SpaceX exposure before it trades, there's that NASA ETF, the one that already holds SpaceX shares through a special purpose vehicle. It's carrying that stake at cost, not marked up to whatever the IPO price ends up being. So when the public valuation lands at 1.75 or 2 trillion, that position inside the fund gets revalued higher overnight. It's an automatic bump to the net asset value the day trading starts. Not a bad way to get some of the direct effect without having to chase single stocks in the frenzy. Among the names we talked about before, Redwire still stands out to me as having more room even after its big move. It's still trading at much lower multiples than some of the other space companies out there. And when the whole sector gets re-rated higher because of index inclusion and fresh capital flowing in, the cheaper names with real contracts and defense exposure can catch up. It's riskier now than it was a few weeks ago because it ran so fast, but the fundamentals haven't changed overnight. But the one I want to spend the rest of our time on today is different. It's smaller, cheaper on a relative basis, and has a direct tie to the SpaceX launch cadence in a way that hasn't been fully priced in yet. This is momentous. Think of it as the delivery service that operates on the highway SpaceX is building. SpaceX launches a Falcon 9 with a bunch of payloads riding along on a rideshare mission. Momentus's vehicle goes up as one of those payloads, detaches once it's in orbit, and then does the last mile work, moving satellites to their final positions, hosting experiments, providing services that the big rocket company doesn't handle itself. The more frequently and cheaply SpaceX can launch, the more potential work there is for a company like this. They just flew their Vigoride 7 vehicle successfully on a recent transporter mission with multiple payloads aboard, and they're already manifested for future flights, including one booked for early next year. That's real contracted business. On top of the SpaceX connection, they've got government work, contracts with DARPA, partnerships tied to the Space Force, and NASA-related activity. The U.S. Space Force budget is growing fast, and programs that need assets moved, serviced, or supported in orbit line up exactly with what Momentus does. Management has laid out a forecast that shows revenue jumping dramatically this year, something like 9 times what they did last year. Now, it's still small in absolute dollars, but that kind of growth rate is what can re-rate a stock when the market starts paying attention. They also cleaned up the balance sheet recently by eliminating convertible debt, moved into a bigger facility, and expanded their clean room capacity right as the sector is about to get more fuel from the IPO excitement. The market cap here is still tiny compared with Rocket Lab or some of the others we mentioned. That gives it more torque if the rising tide in space really lifts these smaller boats the way history suggests it can. Of course, it's speculative. Small companies in this industry can be volatile, can dilute, can miss on contracts, and can go down a lot faster than they go up. This isn't a set it and forget it name. But if you're looking at the next few months, with the IPO roadshow starting, potential mission success updates rolling out, possible new contract wins in areas like space-based interceptors, and earnings coming in August, the setup has several ways it could move higher before any broader sector cool down. Let me lay out how I see the pieces fitting together over the coming weeks and months, just so you can judge for yourself. The IPO window itself, with all the attention and forced buying pressure, could act like a halo over anything tied to SpaceX launches. That period from now through the first couple of weeks after June 12th might see the sharpest reaction in names that haven't run as hard yet. Then you have the ongoing mission reports. Each successful Vigoride flight or payload deployment can bring fresh attention and short-term pops. Government contract news, especially anything tied to the bigger defense space programs, tends to move these stocks fast when it hits. Earnings will give a progress report on that revenue ramp, and any beat or raised outlook could matter a lot. And over a longer horizon, something like a classified program win would be real validation that the market would likely reward. I'm not saying this is going to happen in a straight line or without setbacks. These names swing hard on news and sentiment. There could be profit taking after the initial IPO excitement fades. Execution risk is real. But the asymmetry here is what catches my eye. The downside is limited by the current small size, while the upside, if even a couple of these catalysts land and the sector re-rates, could be multiples from today's levels. That's the kind of setup I like to look at when the broader story is this powerful. Remember, none of this is advice. I'm just connecting dots based on what's public and sharing how I'm thinking about it. You have to do your own homework, look at the filings, understand the risks, and only put in money you can afford to have tied up or even lose if things don't play out. Small cap space stocks are not for everybody. They require patience and the stomach for volatility. If this little momentous story or any of the other names we've touched on today fits with how you're looking at the space build-out, I'd love to hear what you think down in the comments. Which part of the ecosystem are you watching most closely? Are you more interested in the big launch cadence or the service layer that rides along with it? Drop your thoughts below. Your questions and pushback help shape what we dig into next.